Whispers of Wealth, What the Rich Never Confess, full audiobook. Chapter 1, The Silent Beginnings. You often imagine that the lives of the rich are painted with golden strokes from the very first day, as if they were born into a world where doors simply open without a knock. The truth, however, is far quieter and far more ordinary. The beginning of wealth is rarely grand. It is not written in fireworks or broadcast in headlines. It is whispered in the smallest of choices, in the quiet acts of discipline that others overlook, in the patience to hold back when the world insists on rushing forward. That whisper is where wealth begins, and you cannot hear it unless you stop expecting thunder. Think of the child in a modest neighborhood who learns not from abundance but from lack. Perhaps his parents never spoke about investments, never knew how to multiply money, but they pass along something more valuable than gold: the habit of noticing. While others spend their coins on fleeting joys, this child learned that money is a servant, not a master, and that even $1 saved is a quiet rebellion against a world that teaches consumption above all else. By the time he reached 20 years old, he had saved $10,000 through after-school jobs, weekend labor, and the refusal to let money slip through careless fingers. It was not much compared to the fortunes of the wealthy, but it was a beginning, a silent seed planted in ordinary soil. The first secret you must understand is that wealth rarely announces itself at the start. You might imagine that people become rich because they stumble upon a windfall, inherit a fortune, or strike a deal that changes everything overnight. Those stories exist, but they are exceptions. What you will not hear in public conversations is that true wealth builds like a whisper, steady, consistent, and often ignored by the crowd. The rich know that beginnings are invisible to those who want spectacle. They protect their small, quiet efforts from the noise of comparison, allowing compounding to do its work away from the spotlight. Consider the story of Eleanor, a woman who worked as a librarian in a small town during the 1960s. Her salary was humble, her lifestyle modest. Nobody in her circle believed she would ever rise above her station. Yet Eleanor had an eye for patience. Every month, she tucked away $50 into savings bonds, never once skipping, never once convincing herself that it was too small to matter. Decades passed, and by the time she reached retirement age, those whispers of savings had grown into more than $1 million. When the town learned of her fortune, they were stunned, because they had only ever seen the quiet surface of her life. Eleanor had been living in the whisper all along, never confessing the truth of what her small choices had been building in silence. This brings you to another principle hidden within beginnings. Silence protects vision. If you declare too loudly what you're building, you invite the weight of others' opinions. The wealthy understand this instinctively. They move quietly at first, never bragging about their early savings, never parading their small investments. They protect their seed stage from the storms of gossip, because a seed must be buried before it can grow. If Eleanor had told everyone about her $50 habit, perhaps some would have mocked her, others would have advised her to live a little, and her quiet discipline might have cracked under the weight of their voices. Instead, she listened to the whisper, not the noise. Another truth is that the beginnings of wealth are not measured only in money. They are measured in how you choose to see the world. Imagine a young man named David in the late 1980s. He had no inheritance, no special access. What he had was the sharpness to notice patterns. While his friends saw a paycheck as a chance to celebrate at the bar, David saw it as a chance to buy himself time. When he earned $500 in a week, he would set aside $150 as if it never existed. Over the years, that pattern carved a different destiny for him. By the time he turned 30, he had enough saved to buy a modest duplex, renting out one side while living in the other. The rent covered his mortgage, and suddenly his cost of living dropped to nearly nothing. His friends laughed at his frugality in the beginning, but they stopped laughing when he retired at 50 with properties across the city. David never shouted his plans. He allowed his beginnings to whisper until they became undeniable. You must also recognize that beginnings often require a form of self-denial that looks foolish in the eyes of others. Think of a woman who chooses not to upgrade her car every few years, while her neighbors flaunt the latest models. She endures the raised eyebrows, the whispers of her peers who wonder why she drives something so plain. Yet she knows what they do not, Every car note she refuses is another step closer to ownership of something larger. 10 years later, while others are trapped in cycles of debt, she holds the deed to 3 rental homes. The whispers of sacrifice in her early years turned into the roar of security in her later ones. You may wonder why the rich never confess this truth openly. It is not because they wish to hoard knowledge. It is because beginnings are fragile, and the language of patience is often rejected by those who want immediate results. If you tell someone that saving $50 a month could transform their future, they may laugh in your face. They want the secret to millions, not the discipline of beginnings. And so the wealthy keep this part of their story hidden, not out of cruelty, but out of recognition that most will not believe it. The silence of beginnings is also where character is forged. If you cannot be trusted with $500, you cannot be trusted with $5 million. That is why the universe seems to conspire in favor of those who treat their smallest resources with respect. Wealth is not a lightning strike. It is a long conversation with yourself about who you will be when nobody is watching. Eleanor answered that conversation by choosing patience. David answered it by choosing discipline. Countless others who appear ordinary at first glance are answering it right now, shaping futures that will one day astonish the world. And so, when you find yourself at your own beginning, do not despise it. Do not compare it to the glossy success of others who seem miles ahead. Do not imagine that wealth only counts when it is loud. Learn to hear the whisper in your choices. In the silence of a late night when you decide to save instead of spend, in the quiet of a weekend when you choose to study instead of waste time, in the stillness of a paycheck where you decide to invest a fraction instead of consume it all, that is where wealth begins. It will never confess its presence in fireworks or applause. It will sit quietly with you, waiting for years, until one day others look upon your life and call you lucky, never realizing that your luck was simply the whisper they refused to hear. The silence that surrounds the birth of wealth is not accidental. It is part of its very nature. In those early days, when resources are scarce and dreams are fragile, noise becomes dangerous. The moment you broadcast your plans to the world, you invite distraction, doubt, and often ridicule. Wealth, in its infancy, cannot survive the careless chatter of others. That is why the rich often remain quiet about how they started. They know that beginnings thrive in secrecy, like seeds planted deep in the ground where no eyes can see. When you examine the lives of those who eventually grew into extraordinary wealth, you will notice a pattern. They rarely spoke much about what they were doing in their earliest years. They let their actions compound silently. Imagine a man in 1975 who worked as a janitor at a factory in New England. His wages were barely enough to cover his needs. Yet he decided to take advantage of the company's retirement plan, contributing 5% of his paycheck without fail. Week after week, his colleagues teased him, telling him that such savings would never matter. They mocked his worn-out shoes and second-hand coats. But he ignored the noise. By the time he reached 60 years old, his quiet contributions, coupled with decades of compounding, had grown into over $2 million. The janitor who once swept floors became the benefactor of scholarships for generations of children. Nobody would have believed it at the start, and that is precisely why he never confessed it to anyone while it was happening. This is a paradox you must accept. The beginnings of wealth are invisible precisely because they look ordinary. If you were to glance into the life of that janitor during his 30s, you would have seen only modest furniture, a small home, and a used car. Nothing about his life screamed prosperity. And yet, hidden beneath that ordinary surface, something extraordinary was taking place. His small contributions were whispering louder than the visible spending habits of his peers. You must learn to value what cannot be seen in the moment. For every fortune you admire today, there was once a period when nobody admired it, when it looked plain and unremarkable. Take another example from the life of Clara, a single mother in the early 2000s. She worked as a nurse, juggling long night shifts while raising 2 children. Her paycheck was stretched thin, but she made a simple vow. Every month, she would buy 1 share of a mutual fund, no matter what. Some months, it was a painful choice. Her children wanted new shoes. Her friends pressured her to join expensive outings, but she clung to her vow. 10 years passed, and she owned 120 shares. 20 years passed, and her shares had multiplied in value until they were worth more than $300,000. People around her saw the sudden wealth only at the end, but the truth is that it was never sudden. It was silent and consistent, carried by a whisper of discipline that others refuse to hear. Another hidden element of beginnings is a courage to appear foolish. When you save instead of spend, when you invest instead of indulge, you're guaranteed to be misunderstood. The wealthy learn to carry this misunderstanding with grace. They wear older clothes while others mock them. They drive cars long after they are fashionable. They decline invitations that would cost too much. Each of these decisions whispers quietly, stacking one upon the other until they form a foundation of future wealth. By the time their peers realize what has happened, the foundation is already too strong to shake. You might ask yourself why. If this pattern is so powerful, more people do not follow it. The answer lies in human impatience. People want results that shout. They want to double their money overnight, to make $10,000 in a week, to live in luxury before they have even built stability. The whisper of beginnings does not appeal to them because it offers no applause. It demands patience without reward for years. The rich understand this, and so they allow the impatient to laugh while they continue quietly in their discipline. Years later, the laughter fades, replaced by envy, but by then it is too late for those who chase noise instead of whispers. Let me draw you into a story closer to the present. In 2010, a young man named Michael graduated from college with $40,000 in student loans. He worked at a small marketing agency, earning $32,000 per year. On paper, his situation looked bleak, yet he made a decision that changed everything. He would live as if his income were only $20,000 per year, applying the rest toward his loans and investments. For 5 years, he endured ridicule. Friends bought new cars, traveled abroad, and posted glamorous photos online. Michael lived in a cramped apartment with used furniture, declining vacations and expensive outings. But by 2015, his loans were fully paid. By 2020, his investments had grown to more than $200,000. And by the time his friends began to complain about being stuck in debt at age 35, Michael was already preparing to buy his third rental property. He never bragged. He never confessed what he was building. He let the whisper do the work until the results spoke for themselves. There's a profound lesson in his story. Wealth requires you to trade visible comfort today for invisible security tomorrow. The rich embrace this trade, and they do so quietly. They do not need to explain themselves to those who cannot understand. They accept being misunderstood because they know that time will reveal the truth. This acceptance is the soil in which their fortune grows. And here's another truth the rich rarely confess. They are not only saving money in the beginnings, they are saving choices. Every dollar they set aside today multiplies into options tomorrow. The janitor who contributed 5% of his paycheck bought himself the option to retire early. Clara bought herself the option to pay for her children's education without debt. Michael bought himself the option to live free of financial chains in his 30s. These options are invisible in the beginning, but they are priceless when revealed. The poor and middle class often see only the surface of wealth, the homes, the cars, the freedom, but beneath that surface lies a quiet collection of choices made long ago. You must also see that silence itself becomes a teacher. By restraining your impulse to announce your plans, you practice restraint in other areas as well. By refusing to defend yourself against the ridicule of peers, you strengthen your discipline. This is why beginnings feel so difficult. They are training not just your wallet, but your character. Without that training, you will not be ready to carry wealth when it arrives. The whisper of beginnings is not merely about dollars. It is about who you are becoming in the process. So when you stand at the threshold of your own financial path, remember this. Your beginnings will never look impressive, and they are not meant to. They are meant to be silent, ordinary, and even invisible to those around you. That invisibility is your protection. That silence is your strength. Wealth does not start with a roar. It starts with a whisper, and if you are willing to hear it, you will one day find yourself living a life that others cannot comprehend. Chapter 2. The Hidden Language of Money. There is a language spoken by the wealthy that does not appear in any dictionary, a language not taught in schools or universities, and certainly not whispered in the halls of ordinary homes. It is not composed of complicated formulas or financial jargon. Instead, it is a way of seeing the world, a lens through which numbers and opportunities reveal patterns invisible to most. The rich speak this language with ease, yet they never confess its vocabulary to those outside their circle. You can only learn it by changing how you interpret the simplest transactions of daily life. For most people, money is a blunt tool. You earn it, you spend it, you save what remains if you are disciplined. But for the wealthy, every dollar is a signal carrying hidden meaning. They do not ask, "How much can I buy with this?" Instead, they ask, "What story is this dollar telling me? Where can it multiply if I send on a journey instead of killing in consumption?" That subtle shift in perspective is the grammar of wealth. Imagine two friends, James and Robert, both earning $50,000 per year in the late 1990s. James saw his paycheck as a measure of his lifestyle. The first thing he did after every raise was upgrade his apartment, his car, and his wardrobe. To him, money spoke only one sentence: "Spend me to feel bigger." Robert, however, listened differently. He treated each raise not as permission to inflate his lifestyle, but as a code pointing toward opportunity. Instead of moving to a more expensive apartment, he stayed in the same modest one and invested the difference. By the time 10 years passed, James was still renting and juggling credit card balances, while Robert owned 2 small properties producing steady rental income. They began in the same place, but they were listening to 2 entirely different languages. The hidden language of money teaches that value is not always visible. A car may look impressive in the driveway, but it is silently draining wealth through depreciation and maintenance. A modest property, overlooked by most, may quietly generate cash flow every month for decades. The rich know how to interpret this silent dialogue. They understand that what appears glamorous today can be a thief tomorrow, and what looks dull at first glance can become a fountain of wealth. You can see this principle clearly in the story of Isabel, a young woman in 2012 who worked as an assistant at a small law firm. Her colleagues tease her because she wore the same suits for years, never chasing trends. Yet Isabel had learned the hidden language from her grandfather, who once told her, "Money always has 2 voices, the loud one that tempts you and the quiet one that guides you." She listened to the quiet voice. Instead of spending her yearly bonuses on vacations like her peers, she invested them in index funds. By 2022, a decade later, her portfolio had grown to more than $200,000. None of her friends understood how she had managed to leap ahead so far on the same salary. The truth was simple. She had been fluent in a language they never learned to hear. The rich also understand timing differently. To most, the market is a place of chaos, rising and falling without meaning. To those fluent in the hidden language, the market speaks rhythm. They know that fear in the crowd often signals opportunity, and euphoria often signals danger. Take the crash of 2008. While millions panicked, selling everything at a loss, a small group of quiet listeners bought shares of strong companies at prices that looked absurdly low. 10 years later, those same shares had multiplied several times over. The language whispered, "Now is the moment," and they obeyed while others screamed in fear. This language is not limited to stocks or property. It also applies to human relationships. When a wealthy individual meets someone, they are listening for more than charm or appearance. They are listening for reliability, for trustworthiness, for long-term alignment. They know that one loyal partner can open more doors than 100 shallow contacts. This is why you will often see wealthy people cultivate quiet, small circles rather than loud, sprawling networks. They understand that quality whispers louder than quantity. Another key feature of the hidden language is leverage. To the untrained ear, debt always sounds dangerous. To the wealthy, it is a dialect that, if spoken carefully, multiplies possibility. Imagine a business owner who borrows $200,000 to buy equipment that generates $50,000 of profit each year. To most, the debt looks frightening, a chain around the neck. To the wealthy, it looks like opportunity translated into cash flow. They hear the language of multiplication, where others hear only the threat of loss. This is why rich people often appear fearless in situations where the middle class hesitates. They are not reckless, they are fluent. You may wonder why schools never teach this language. The reason is simple. Education systems are designed to create workers, not interpreters of wealth. Schools teach you how to calculate interest, but not how to interpret what interest really means in your life. They train you to memorize numbers, not to listen to the whispers behind those numbers. The wealthy pass this language to their children quietly, at dinner tables and in casual conversations, while the rest of the world is left outside, struggling to translate without a dictionary. If you wish to learn it, you must begin by changing your questions. Instead of asking, "Can I afford this?" begin asking, "What will this cost me in the future?" Instead of asking, "How much did I earn this month?" ask, "How much of this will still work for me 10 years from now?" Every time you shift a question, you move closer to fluency. The rich never confess this because it cannot be taught through lectures. It must be absorbed through lived practice, through a change of perception so deep that it becomes instinct. The hidden language of money is always present, whispering to you in the background of every transaction. The question is whether you will continue to ignore it, or whether you will learn to listen. There is something profoundly unsettling when you realize that the same world you walk through is not the same world the wealthy experience. You see price tags, they see signals. You see expenses, they see flows. You see a paycheck, they see a tool. The difference is not in the object themselves, but in the way those objects are interpreted. The rich live inside a parallel vocabulary, a hidden language that translates every choice into a code about power, time, and freedom. If you do not understand that language, you will forever remain at the mercy of those who do. One of the clearest examples of this difference can be seen in how people approach housing. For the middle class, the purchase of a home is the ultimate achievement, a culmination of years of saving and a badge of stability. They stretch their budget to buy the biggest house they can afford, telling themselves it is an investment. The rich, however, speak a different dialect. They know that a personal home is often a liability, draining cash flow through taxes, repairs, and endless upgrades. They treat their living space modestly, while directing capital toward properties that produce income. Imagine two families in the year 2000. The first poured every cent into a $400,000 suburban home, celebrating their triumph. The second bought a $200,000 modest residence and invested the remaining $200,000 into two small rental properties. 20 years later, the first family was still paying property taxes on their oversized house, while the second family was living for free, supported by tenants whose rent covered all expenses. Both families owned homes, but they were living in two entirely different languages. The hidden language also changes how you interpret time. To most, earning $50 for an hour of labor feels satisfying. To the wealthy, that same hour is measured differently. They ask whether the $50 earned today will still echo tomorrow. If the answer is no, the work is nothing more than a trade of life for consumption. If the answer is yes, the work becomes a seed. This is why wealthy individuals often endure periods of lower income early on in order to build systems that outlast them. A business that loses money in its first 2 years but eventually produces $10,000 a month is, to them, a fluent sentence in the hidden language. To everyone else, it looks like failure followed by a miracle. But miracles are rarely miracles. They are simply words written in a language you never learned to read. Consider the story of Victor, a mechanic in 1983. He earned modest wages, repairing cars in a small town. Most of his peers spent their earnings quickly, upgrading their tools or buying nicer cars of their own. Victor, however, listened differently. He noticed that the local gas station was for sale, a rundown corner shop most people ignored. It cost $30,000, which seemed impossible for someone of his income. Yet Victor had saved $10,000 and secured a loan for the remaining $20,000. Everyone around him said it was foolish to take on such debt. They heard only the language of risk. Victor heard something else. He heard the flow of traffic past that corner, the steady hum of cars that would never stop needing fuel. Within 5 years, his modest station had doubled in value and generated profits far exceeding his wages. He eventually sold it for over $100,000 and used the proceeds to buy more properties. The world thought he had stumbled upon luck. In truth, he had simply read the language written in plain sight, a language others dismissed as noise. Debt itself is one of the most misunderstood dialects. To the untrained ear, borrowing always sounds like danger. But the wealthy differentiate between destructive debt and productive debt. They hear a mortgage on a rental property not as a burden, but as a lever, one that turns the effort of others into their own security. They hear a business loan not as chains, but as a bridge to expansion. The poor and middle class run from all debt as if it were poison, never realizing that in the right hands, it can be medicine. This is why you may see a wealthy individual carrying millions in loans, and yet sleeping soundly, while someone with a few thousand in credit card balances drowns in stress. They are speaking two different dialects of the same language. Another feature of this hidden code is the way the rich interpret fear. For most, a falling stock market screams disaster. For the wealthy, it whispers invitation. In 2008, when markets collapsed and fear infected every headline, most people sold everything in panic. Yet those fluent in the hidden language quietly bought shares of strong companies at what looked like fire sale prices. 10 years later, those investments had doubled and tripled. To those outside the language, this looked like gambling that paid off. To those inside, it was as predictable as rain following clouds. The wealthy also hear opportunity in places where silence exists. They notice industries nobody is talking about, technology still laughed at, neighborhoods still ignored. They do not wait for confirmation from the crowd, because they know that by the time the crowd sees it, the opportunity is already gone. This is why fortunes are built in whispers, not shouts. Think of the people who invested in small internet companies in the early 1990s, when most of the world still dismissed the web as a toy. They heard the whisper of a new dialect, one that would soon dominate global commerce. Those who ignored it stayed behind, trapped in old vocabularies. This hidden language is also generational. Parents fluent in it pass it to their children, without formal lessons. A child overhears a father explaining why they chose to buy shares of a company instead of a new car, and that becomes a phrase in their vocabulary. A daughter watches her mother run a business from the kitchen table, and that becomes another phrase. By the time these children reach adulthood, they are bilingual in both the common tongue of spending and the hidden tongue of wealth. They move through life translating every decision with ease, while their peers stumble in confusion. Learning this language requires humility, because it often contradicts what you've been taught. You must be willing to look foolish when you choose not to upgrade your phone every year, or when you invest in an asset that nobody else believes in yet. You must be willing to endure silence when others brag about their purchases, while you remain understated. But with time, the vocabulary becomes second nature. You begin to hear whispers others cannot hear, to read signals others cannot see. And once you are fluent, you realize why the rich never confess it, because no confession can make someone else fluent. You must learn to listen for yourself. So the next time you handle money, pause. Ask yourself what it is really saying. Do not settle for the loud voice of temptation, the one that shouts, "Spend me now." Listen for the quiet, hidden voice that asks, "Where can I grow? How can I serve you tomorrow if you treat me with respect today?" That is the hidden language of money, and if you learn to hear it, you will never look at the world the same way again. Chapter 3. The Invisible Networks. Wealth is never a solitary achievement, though it often looks that way from the outside. People imagine that the rich are lone geniuses, operating in isolation, pulling themselves upward by nothing but personal brilliance. But if you look closely, if you strip away the public story and search beneath the surface, you will discover that fortunes rest not only on money but on invisible threads of connection. These threads are not always glamorous, not always obvious, yet they are strong enough to move entire empires. The wealthy never confess how crucial these networks are, because they prefer the myth of independence. The truth, however, is that wealth always grows inside a web of relationships, trust, and silent favors exchanged. Think of opportunity as a locked door. Most people spend their lives rattling the handle, waiting for someone to open it. The wealthy rarely waste time this way. They know that behind every locked door stands a person who holds a key, and if you know how to connect with that person, the door swings open effortlessly. The invisible network is that collection of key holders, mentors, partners, allies, investors, confidants. Without them, the journey is longer, harder, and often impossible. Take the example of Thomas, a young entrepreneur in the 1990s who launched a small tech company out of his garage. His idea was clever, but ideas alone are not currency. What changed his path was a neighbor who happened to be an executive at a venture capital firm. That neighbor introduced him to the right room, where 3 investors decided to take a chance on his vision. Within 5 years, the company grew into a multi-million-dollar enterprise. From the outside, the story looked like a tale of brilliance and luck. But the invisible network, a neighborly connection, a shared conversation over a fence, was a hidden gear turning the machine. The rich understand that these networks are not built through desperation, but through authenticity. They do not approach others with a hungry hand extended. They approach with value to offer, with curiosity to learn, with the ability to give before taking. This is why their connections endure. When you only chase people for what they can give you, the connection is brittle, snapping the moment you ask too much. But when you build genuine trust, when you show up consistently with reliability, the thread becomes unbreakable. Another part of the hidden network is reciprocity. You may see a wealthy individual casually making introductions, offering advice, or extending favors without charge. What you do not see is the long-term accounting happening beneath the surface. They know that every seed of goodwill planted has the potential to grow into a tree of opportunity later. It may take 5 years, it may take 20, but the return will come. The poor and middle class often dismiss such acts as charity or waste of time, never realizing that generosity is also a currency in the economy of networks. Consider Maria, a young woman working as a junior associate at a law firm in 2004. She noticed that a senior partner struggled with technology, so she offered to help him set up digital systems in his office. It took her weekends and evenings, unpaid, but she did it gladly. 2 years later, when a major corporate client requested a team to handle a massive case, that same partner insisted Maria join the table. The experience catapulted her career forward, and within a decade, she was a partner herself. The invisible network had spoken. A thread of trust, woven through small acts of service, transformed her trajectory. The wealthy also recognized that geography matters. They deliberately place themselves in cities, neighborhoods, and even social events where these threads are more easily woven. They are not merely chasing luxury. They are chasing access. A dinner party in New York, a conference in Silicon Valley, a charity gala in London. These are not random indulgences. They are arenas where invisible networks intersect, where conversations spark partnerships worth millions. While others view such events as frivolous or pretentious, the rich listen carefully for the whispers of opportunity carried in casual conversations. But the invisible network is not always about financial gain. Sometimes it is about survival. In 1987, during a market crash, many investors lost everything. Yet a select group recovered quickly, not because they had better portfolios, but because their networks provided lifelines, temporary loans, insider knowledge of safer positions, or simply the emotional support to stay in the game while others panicked. These invisible safety nets are rarely spoken of because they destroy the illusion of complete independence. Yet without them, many fortunes would have vanished into history. The rich cultivate these networks over decades. They write thank you notes when others forget. They remember birthdays. They invest time in conversations that appear unimportant. They attend funerals, send congratulations, and offer condolences. These gestures, small and human, weave a fabric of loyalty stronger than any contract. When the moment comes to need a favor, the answer is yes before the question is even finished. That is the invisible network at work, silent yet decisive. And here is the hardest truth. You cannot buy your way into these networks overnight. They are earned slowly, through consistency and character. This is why the rich do not often confess how central networks are to their success. It would expose how fragile wealth can be without them, how dependent it is on the goodwill of others. Instead, they present the myth of self-sufficiency. But if you listen closely, if you watch how they move, you will see the web glimmering just beneath the surface, holding everything together. So if you wish to understand wealth, you must stop imagining it as a solitary mountain climb. It is more like crossing a vast river on a series of invisible bridges. each one built by another person who trusted you enough to let you step across. Without those bridges, you remain stranded on the shore. With them, you arrive at the other side, where others will look at you and call you brilliant, lucky, destined. They will not see the invisible networks that carried you. They were never meant to. The myth of the self-made millionaire has always been comforting to those on the outside. It suggests that brilliance alone, willpower alone, or a single revolutionary idea can lift you above the rest. Yet, when you pull back the curtain, when you examine the anatomy of real fortunes, you find the fingerprints of dozens, sometimes hundreds of people. Friends who vouch for credibility, mentors who offered guidance, colleagues who introduced partners, even rivals whose opposition sharpened focus. All of them part of the unseen ladder supporting the climb. This is why wealth never grows in isolation. It grows in webs, and webs are invisible until you learn to feel their threads. One of the most striking differences between how the average person and the wealthy move through the world lies in their awareness of these threads. The average person treats relationships casually, assuming they exist only for companionship or convenience. The wealthy treat them as architecture. Every interaction is a potential brick in a foundation. Every conversation a possible beam that may support a future bridge. This does not mean they exploit people. On the contrary, it means they honor connections with intentionality, never knowing which one may matter in 10 or 20 years. Take the story of Richard, a young salesman in 1979. He worked in a small office selling photocopiers, barely making ends meet. One afternoon, instead of rushing through a meeting with a low-profile client, he lingered, answering questions with care, listening more than speaking. That client happened to be the cousin of a regional distributor, who later introduced Richard to a network of business owners. Within 3 years, Richard was no longer just a salesman. He was co-owner of a thriving distribution company. From the outside, people saw a sudden leap, but the leap was not sudden. It was carried by an invisible thread tied to a single moment of patience and attention. The rich understand that the quality of their network determines the quality of their opportunities. They do not chase after everyone. They do not waste energy collecting contacts like trinkets. Instead, they curate. They look for reliability, consistency, and shared values. A single connection with integrity outweighs 100 superficial acquaintances. This is why their circles sometimes look small, but those small circles carry extraordinary weight. Another dimension of invisible networks is reputation. Wealthy individuals know that reputation travels faster than they do. Long before they walk into a room, their name has already entered, whispered by others. If those whispers are favorable, doors swing open. If they are not, doors remain locked no matter how loudly they knock. This is why they guard reputation with obsessive care. They honor promises. They follow through on commitments. They treat waiters with the same respect as investors. Each action is a thread woven into the network, invisible but unforgettable. You can see this in the example of Lena, who began her career as a graphic designer in 2002. She treated every client, even the smallest, with professionalism and kindness. 10 years later, when a former client became an executive at a major publishing house, he remembered Lena's consistency. Without her even asking, he offered her a contract worth hundreds of thousands of dollars. She had not been chasing him, had not been begging for opportunity. Her reputation had traveled ahead of her, weaving an invisible thread that pulled her upward. Invisible networks also operate across generations. Wealthy families understand that a legacy is not only financial but relational. They introduce their children to mentors, arrange internships, sponsor opportunities, and quietly open doors long before those children realize the value of such introductions. A son may land a coveted position, not because of his resume alone, but because a former associate of his father trusts the family name. A daughter may secure investment for a startup, not because her pitch is flawless, but because the investor once owed her grandfather a favor. To outsiders, this looks unfair, but in reality, it is simply the compounding of networks across time. The poor and middle class often underestimate this. They rely solely on formal applications, cold calls, and blind auditions. They believe opportunity is decided in public arenas. The rich know it is decided in private conversations. in the invisible rooms where decisions are made long before announcements reach the world. That is why they spend years cultivating access to those rooms, not through shortcuts, but through consistent participation in the lives of others. But here lies another truth the wealthy rarely confess. Networks demand maintenance. They are not one-time investments. Just as money must be reinvested to grow, relationships must be nurtured to remain alive. This means showing up when it is inconvenient, offering help without being asked, remembering details others forget. Many people fail at this because they treat connections as transactional. One favor, one benefit, and then silence. The wealthy avoid this mistake. They water the roots even when no fruit is visible, because they know that harvest comes unpredictably but inevitably. Think of Harold, a businessman in the late 1980s. He made a habit of calling old colleagues just to ask how they were doing, never asking for anything. He sent small notes of encouragement, remembered anniversaries, and congratulated them on achievements. Decades later, when Harold faced a financial downturn, those very colleagues stepped forward with offers of partnership, investment, and contracts. What appeared as sudden rescue was actually the delayed return of seeds planted years earlier in the soil of loyalty. Invisible networks also operate at the level of trust during crisis. When markets collapse or ventures stumble, the wealthy rarely stand alone. Behind them are lines of credit extended by friends, investors willing to wait longer for repayment, mentors offering guidance that steadies the course. This does not mean they are immune to loss, but it means their losses rarely destroy them completely. The network cushions the fall. Without it, many fortunes would have dissolved at the first downturn. With it, those same fortunes rebound and grow stronger. This is why, if you study the biographies of wealthy individuals, you'll often find footnotes about friends, allies, and partners who never appear on magazine covers. A casual introduction at a dinner, a colleague who vouched for character, a neighbor who shared advice. All invisible to the public, yet decisive in the private reality of wealth. The rich never confess this loudly, because to do so would shatter the illusion of solitary genius. They let the world admire the lone hero, while quietly acknowledging the web that carried them. So when you look at your own life, ask not only how much money you are earning or saving, but also how many invisible threads you are weaving. Every act of integrity, every seed of kindness, every moment of listening is another thread. Alone, each thread looks fragile. Together, over time, they form a net strong enough to catch opportunities you could never have reached alone. That is the unseen truth of wealth. It does not stand alone. It stands on the shoulders of networks, invisible to the crowd, but undeniable to those who live within them. Chapter 4, The Calculated Masks. If wealth were a fire, it would burn too brightly without protection. The wealthy know this, and so they cover their fortunes with masks, layers of disguise that allow them to move through the world without drawing unnecessary flames of envy, scrutiny, or opportunism. To the untrained eye, these masks look like modesty or eccentricity, but in truth, they are shields carefully designed to protect what lies beneath. The rich rarely confess this practice, because the very act of revealing it would weaken the mask itself. Yet if you look closely, you will see how wealth survives and grows precisely because it learns to hide in plain sight. The first mask is simplicity. Many who hold extraordinary fortunes live far beneath their means. They drive ordinary cars, wear plain clothes, and dine in unremarkable restaurants. This is not because they cannot afford extravagance, but because they understand the cost of attention. An expensive car announces itself loudly, drawing eyes that ask questions and sometimes hands that reach too far. A plain car whispers nothing, allowing its owner to move undisturbed. Consider Warren Buffett, who for decades lived in the same modest house in Omaha that he purchased in 1958. Outsiders marveled that one of the wealthiest men on earth would choose such simplicity, but Buffett was fluent in the logic of masks. The less you reveal, the less you invite interference. The second mask is normalcy. Wealth often camouflages itself within the patterns of the middle class. A wealthy woman may shop at the same supermarket as everyone else, not because she needs to, but because it allows her to blend. Her neighbors see nothing unusual, and so they ask no questions. Meanwhile, her true wealth compounds silently in accounts and investments no one around her ever imagines exist. This ability to appear ordinary is one of the most powerful shields a wealthy person can wear. You'll find that the richest people in any town are often not the ones who look richest. They are the ones who have mastered the art of being invisible while living in abundance. The third mask is misdirection. Sometimes the wealthy deliberately highlight small luxuries to distract from greater treasures. A man might boast about his new watch, letting others assume that is a pinnacle of his indulgence, while never mentioning the millions he quietly holds in assets. The mask works because people are easily fooled by surface symbols. They equate wealth with what they can see, never realizing that true wealth is defined by what remains unseen. By exaggerating something small, the wealthy divert attention from what truly matters. There is also the mask of generosity. Wealthy individuals often give publicly in ways that draw admiration, but conceal the real structure of their power. A donation to a local charity, a scholarship for a school, a visible act of kindness. All of these create an image of benevolence that discourages criticism. Yet behind the mask, their portfolios, trusts, and enterprises remain largely untouched. Generosity is genuine in many cases, but it also doubles as protection, a way of shaping how the world perceives them. After all, who questions the wealth of someone who seems to be giving it away? Masks are not only external, they are also internal. The wealthy train themselves to control their expressions, to hide fear during downturns and excitement during opportunity. If they revealed their emotions in real time, the world would learn too much. Imagine an investor who discovers a stock poised for explosive growth. If she beams with enthusiasm at every mention of the company, others will rush in, destroying her advantage. Instead, she wears the mask of indifference, shrugging at the opportunity until her position is secure. This emotional disguise is as critical as any external camouflage because it preserves the advantage of silence. Consider the story of Samuel, a real estate developer in the 1990s. While others flaunted their wealth with mansions and luxury cars, Samuel continued living in a modest townhouse, driving the same pickup truck he had owned for years. His colleagues mocked him for being cheap, but his mask was deliberate. By appearing ordinary, he avoided becoming a target for lawsuits, envy, or theft. Meanwhile, he quietly purchased properties across the city, building an empire that no one noticed until decades later, when his name appeared on the deeds of half the downtown blocks. His mask of simplicity had been so effective that even his neighbors never suspected the scale of his fortune. The calculated mask also serves another purpose. It buys freedom. If you are constantly broadcasting wealth, you become imprisoned by the expectations that come with it. You must maintain appearances, satisfy endless demands, and live in fear of losing the image you have built. The wealthy who wear masks escape this prison. They are free to walk unnoticed, to choose their company without suspicion, to live on their own terms. Their wealth is real, but their mask protects them from being consumed by the performance of wealth. And yet, perhaps the most fascinating mask is silence. The wealthy do not announce their wins. They do not explain their strategies in detail. They let rumors swirl, while they move quietly in the background. Silence is the ultimate disguise, because in a world addicted to noise, it makes you invisible, and invisibility is often the richest form of security. So when you wonder why some of the wealthiest people you know appear so ordinary, remember this. You are not seeing their reality. You are seeing their mask. And that mask is not deception. It is strategy, a shield honed over years to ensure that their wealth continues to grow without interruption. Every fortune attracts attention, and attention is not always safe. This is why the wealthy rarely show you the full truth of their lives. They understand that wealth draws out both admiration and envy, loyalty and opportunism, respect and resentment. To survive within these contradictions, they develop masks, carefully crafted images that protect them from the dangers of being fully seen. These masks are not lies in the crude sense. They are strategies, cultivated disguises that allow wealth to move silently while the world fixates on appearances. One of the most common masks is understatement. You have probably met someone who seemed almost too modest about their success. Perhaps they drove an ordinary car, spoke casually about their small business, and lived in a house that looked comfortable but not extraordinary. Yet if you examine their accounts, you would discover millions quietly compounding. They wear the mask of understatement to shield themselves from judgment. They know that if people knew their true net worth, the nature of every interaction would shift. Friends might envy them. Relatives might pressure them. Strangers might target them. By presenting themselves as ordinary, they protect the extraordinary truth from exposure. Another mask is distraction through consumption. Sometimes the wealthy deliberately showcase visible luxuries not because they crave admiration, but because they want you to stop looking deeper. A watch on the wrist, a designer bag, a flashy vacation. These are signals designed to keep the conversation shallow. People see the surface indulgence and assume they have understood the whole story. Meanwhile, the real story remains hidden in trusts, investments, and corporate structures invisible to the public eye. The visible indulgence becomes camouflage for the invisible foundation. The rich also use the mask of busyness. They make themselves appear consumed by endless projects, meetings, and responsibilities. This discourages others from probing too deeply into their private affairs. If you believe someone is simply too busy to engage, you stop asking questions. Behind that mask of busyness, however, many wealthy individuals live with far more freedom than they reveal. They may spend long stretches of time traveling, resting, or simply enjoying their lives, but they allow the mask to tell the world that they are trapped by responsibility. The world believes the mask, and the wealthy retain their privacy. Emotional masks are equally important. Imagine a wealthy investor watching markets collapse. Panic is everywhere. Reporters scream at disaster. Neighbors whisper ruin. Friends beg for advice. If the investor revealed true excitement, because falling prices mean discount opportunities, others would follow, destroying his advantage. And so he wears a mask of concern, appearing sympathetic to the panic, while quietly accumulating assets at bargain prices. This mask is not deception for cruelty's sake. It is survival in a game where showing your hand too early can cost millions. You see this most vividly in the story of Helena, who built a chain of successful restaurants in the early 2000s. When the recession of 2008 struck, her competitors collapsed. Customers assumed she must be suffering too, since her restaurants appeared quiet. Helena leaned into the mask, cutting back on visible advertising, speaking modestly in interviews, and allowing the public to assume she was struggling. Behind the mask, however, she was acquiring the properties of her bankrupt rivals at deeply discounted prices. By 2012, when the economy recovered, she owned twice as many locations and dominated the market. The mask of struggle had shielded her expansion, leaving others blind to her true moves. There is also the mask of generosity, which functions as both a shield and a bridge. When wealthy individuals donate to charities or fund public works, the world sees benevolence. And benevolence is real, but it also changes the narrative around them. People are less likely to resent someone who is building hospitals or scholarships. The generosity earns goodwill that acts as armor. In ancient times, kings built monuments to distract their subjects from the accumulation of power. Today, the wealthy sponsor cultural events, fund schools, or establish foundations. The mask of generosity protects the empire by softening how others perceive it. Even silence itself is a mask. The rich know that what you do not say is as powerful as what you do. They often allow rumors to spread without correction. If people underestimate them, so much the better. If people overestimate them, that too can be useful. They understand that silence gives them control, because it forces others to fill the gaps with their own assumptions. Silence is the most elegant mask, requiring no effort yet concealing everything. And perhaps the most subtle mask of all is ordinariness within the family. Children of wealthy parents are often raised to believe they are middle class, at least for a time. They wear the mask of ordinary life, chores, budgets, limitations, even though vast resources exist in the background. Why? Because the mask teaches discipline, resilience, and humility before they are exposed to the full weight of wealth. The mask protects them not only from outsiders, but from the corrosion of entitlement within themselves. The calculated mask is never accidental. It is as deliberate as an investment, as strategic as a business plan. Every public action is filtered through the question, what story do I want the world to believe? That story may be modesty, generosity, busyness, or even struggle, but it is rarely the full truth. The wealthy understand that exposure invites danger, and so they choose concealment. They do not owe the world their reality, only the version of it that ensures their safety and freedom. So when you look at someone and assume you know their wealth because of what you see, the car they drive, the house they own, the lifestyle they present, remember that you may only be staring at a mask. The truth is almost always different, hidden deliberately, waiting in the shadows where it can grow undisturbed. The wealthy do not confess this, because the mask works only if you believe it, and most people do. Chapter 5, The Disciplined Distance. Wealth is not built only by what you grasp. It is also built by what you refuse to touch. The poor and the middle class often imagine that the rich possess more because they are willing to grab more, to seize opportunities with both hands, to chase aggressively. But what you rarely see is how often the wealthy say no. Behind their fortunes lies a discipline of distance, the ability to walk away when others rush forward, the ability to withhold when a crowd insists on indulging, the ability to delay gratification, even when gratification is within reach. It is not just about taking right actions, but about resisting the wrong ones. And this quiet refusal is one of the greatest secrets of wealth. Most people collapse under the pressure of proximity. They see something they desire, a new car, a bigger house, a vacation, a deal that promises quick profit, and they cannot resist. The closer it is, the harder it becomes to step back. The wealthy train themselves in the opposite direction. They cultivate the strength to stand at the edge of temptation and keep their distance until the numbers and the timing align in their favor. This is not indifference, but mastery. To practice distance is to refuse being enslaved by impulse. Consider the story of Daniel, a young executive in 1985. He had just received his first significant bonus, $20,000, and his colleagues encouraged him to buy a sports car, the ultimate badge of success. Daniel wanted the car desperately. He even visited the dealership, touching the wheel, smelling the leather, imagining himself admired on the road. But as he stood there, he reminded himself of a lesson his grandfather had taught him. Distance protects the future. Instead of buying the car, he invested the money into a portfolio of stocks and bonds. His colleagues mocked him, calling him cheap. 10 years later, that investment had grown into more than $70,000, enough for a down payment on an apartment building. By the time Daniel was 40, he owned properties that produced income every month, while his colleagues were still making payments on cars long gone. Distance had preserved his fortune, while indulgence had drained theirs. The discipline of distance applies not only to consumption, but also to relationships. The wealthy understand that not every partnership is beneficial. Not every handshake should be accepted. They have learned to walk away from deals that glitter but lack substance, from people who charm but cannot be trusted, from alliances that promise quick wins but carry hidden costs. This distance requires courage, because saying no often feels like losing, but in reality, it is protection. The refusal to tie themselves to the wrong people saved them from disasters that could erase years of progress. You can see this in the example of Margaret, a businesswoman in the 1990s. She was offered a chance to join a partnership in a trendy restaurant chain that promised explosive growth. Many of her friends jumped in, dazzled by the excitement. Margaret studied the books and felt uneasy. The numbers did not add up, the management lacked discipline, and the expansion looked reckless. Against the pressure of her peers, she declined. 2 years later, the chain collapsed, dragging its investors into bankruptcy. Margaret, meanwhile, had invested quietly in a logistics company that looked boring but solid. That company grew steadily and was later acquired for a large sum. Her fortune was not built by chasing every opportunity, but by practicing the discipline of distance. Another way the wealthy use distance is through patience in markets. Ordinary investors often panic when prices fall, selling at the worst possible time. The wealthy keep their distance from the emotional frenzy. They allow panic to pass without being pulled into it, holding their positions until recovery comes. Similarly, when markets surge and everyone else rushes to buy, they often stay back, resisting the fever of greed. By keeping distant from a crowd, they avoid both the trap of fear and the trap of euphoria. The discipline of distance is also about time. The wealthy do not need to be everywhere, do everything, or please everyone. They guard their calendars fiercely, understanding that time is the ultimate currency. They keep distance from unnecessary obligations, from endless meetings, from distractions disguised as opportunities. Each no preserves hours that could be invested in what truly compounds. Most people confuse busyness with productivity, filling their days with noise. The wealthy cultivate space, using distance to ensure that their energy flows only toward what matters. Think of Jonathan, a consultant who built a fortune in the 2000s. His secret was not working longer hours than his peers, but working fewer on the right projects. While colleagues chased every contract, Jonathan declined most offers, focusing only on clients who paid well and offered repeat business. People thought he was foolish for turning down so much work, but his selective approach allowed him to scale efficiently. By keeping distance from low-value opportunities, he multiplied his high-value results. Distance also guards emotions. The wealthy do not allow themselves to be constantly provoked by every insult, rumor, or challenge. They know that reputation and confidence matter more than ego. By refusing to engage in petty disputes, they preserve their energy for strategic battles. This emotional distance protects them from the endless drains that entangle others. Perhaps the hardest distance is the one maintained with comfort itself. The wealthy often live below their means not because they cannot afford more, but because they refuse to let comfort weaken their edge. They know that indulgence can breed complacency. By keeping distance from unnecessary luxury, they maintain the hunger that drives growth. You'll often find that those who sustain wealth across generations are the ones who resist letting their children drown in excess. They create controlled distance, ensuring that the next generation learns resilience before they inherit abundance. The discipline of distance is rarely admired in the moment. To outsiders, it looks like hesitation, cheapness, or even fear. Only years later does its wisdom become clear. The sports car fades, the flashy deal collapses, the frantic schedule burns out. But the one who practiced distance stands steady, wealth preserved and multiplied. That is why the rich never confess how often they walk away. To confess it would reveal that the real strength of wealth lies not in what you chase, but in what you refuse. There's a peculiar paradox about wealth that most people never understand. Fortune grows not only through bold moves, but also through deliberate restraint. The richest individuals are not constantly chasing every opportunity, every luxury, or every applause. Instead, they practice the art of stepping back, of creating a protective distance between themselves and the noise of the world. This discipline is invisible, quiet, and often misunderstood, but it is one of the most powerful forces behind enduring wealth. Distance is first a defense against temptation. When you do not train yourself to resist the urge of immediate gratification, money will always slip through your fingers no matter how much you earn. Picture Emily, a young professional in 2003 who earned her first significant salary. Her friends celebrated by upgrading apartments, buying designer handbags, and booking expensive trips. Emily longed to join them, but she decided to keep her distance. She rented a modest one-bedroom flat and kept driving her 10-year-old car. With the money she saved, she invested consistently in index funds. 15 years later, while her friends struggled under the weight of credit card debt and rising costs, Emily's portfolio had grown to nearly $500,000. She was free to walk away from her job when she wished, not because she had seized something extraordinary, but because she had quietly refused countless small temptations. Distance also creates clarity. The wealthy understand that when you're too close to every offer, every promise, every flashy trend, you lose the ability to see what is real. They deliberately step back, observing from a vantage point that most people never take time to find. Imagine being in a crowded marketplace where vendors shout loudly about the quality of their goods. The person who rushes in immediately is overwhelmed by noise and persuasion. The one who steps back, watches, and waits discovers which stalls attract repeat customers, which goods truly endure, and which promises are hollow. That perspective, born of distance, is what allows the wealthy to choose wisely. Another form of distance is emotional detachment from outcomes. Most people tie their identity to every win or loss, celebrating wildly when they succeed and despairing when they fail. The wealthy discipline themselves to remain steady, because emotional turbulence clouds judgment. Consider Michael, an investor in 2008. As markets collapsed, His colleagues sold everything in panic. Michael, however, kept his distance from the hysteria. He studied quietly, bought undervalued stocks, and waited. By 2015, his portfolio had tripled, while those who panicked were still recovering. His fortune was not the result of extraordinary brilliance, but of emotional distance, the ability to resist drowning in the tide of fear. Distance also governs relationships. Wealthy individuals know that the wrong companions can be more dangerous than bad investments. They learn to separate themselves from people who drain energy, exploit generosity, or encourage reckless choices. This form of distance is painful because it sometimes requires walking away from friendships or even family ties that sabotage discipline. Yet without it, wealth cannot endure. An empire can be destroyed not by markets or governments, but by a single toxic relationship. The discipline to hold people at arm's length when necessary is as vital as any financial strategy. There is a story of Anthony, an entrepreneur in the 1990s. He had a brilliant idea for a chain of fitness centers, but he partnered with friends who lacked discipline. They pressured him to expand too quickly, to spend on luxuries, to cut corners. Anthony resisted, eventually severing ties despite the strain it caused. His friends ridiculed him, calling him disloyal. But years later, when their ventures collapsed, Anthony's chain endured, eventually being sold to a national corporation for millions. His wealth survived because he had the courage to create distance from people who would have dragged him under. Another kind of distance is geographic. The wealthy are intentional about where they place themselves. Sometimes they distance themselves from their hometowns, leaving behind environments that suffocate ambition. Other times, they create physical distance from environments of indulgence, choosing to live in quieter communities where they can think clearly. This geographic distance protects them from the pull of conformity. It allows them to focus on building rather than performing. Many of the world's richest individuals live far from the spotlight, in towns or neighborhoods where their wealth is not constantly on display, precisely because distance preserves their freedom. Distance is also the secret behind compounding. When you invest money, time is your ally only if you keep your distance from it. The temptation to touch, to withdraw, to interrupt is powerful. Those who cannot resist sabotage their own future. Those who master distance allow time to weave its quiet magic. Think of Clara, who began investing just $200 a month in her 20s. Friends told her it was too little, that it would never matter. She ignored them, kept her distance, and let the decades pass. By the time she was in her 50s, she had accumulated over $1 million. Her fortune was not born from brilliance, but from distance. The refusal to interfere with the compounding of her small, consistent efforts. And yet the most profound distance of all is from ego. Wealth attracts applause, and applause intoxicates. Many fall into the trap of chasing validation instead of building quietly. They buy mansions not because they need them, but because they want to be seen. They throw parties not because they enjoy them, but because they crave admiration. The wealthy who endure resist this temptation. They distance themselves from a need to be recognized, knowing that true wealth is freedom, not performance. By holding ego at a distance, they preserve the energy and focus needed to protect their fortune. So when you see someone who seems disciplined, who walks away from opportunities others rush toward, who resists indulgence, who refuses to be trapped by ego, understand this. You are not seeing hesitation. You are seeing mastery. The discipline of distance is one of the richest languages wealth speaks, though it whispers so quietly that few ever hear it. Chapter 6. The legacy they never announce. The wealth you see is rarely the wealth that lasts. The cars, the homes, the luxury vacations, all of these are loud symbols, shouting to the world that someone has succeeded. But true wealth is quiet, and its greatest expression is legacy. The rich almost never confess this because legacy cannot be captured in headlines or photographed from magazines. It is not glamorous. It is not even immediate. Legacy is what remains long after they are gone, the invisible echo of decisions made decades earlier. And the secret is this. The most powerful legacies are rarely announced. They are built silently, deliberately, in ways that only become visible when time has done its work. You may think of legacy as something grand, reserved for billionaires who endow universities or build museums. but the truth is more intimate. Legacy is often found in a child who grows up disciplined because her parents taught her the language of money, in the family business that survives because one generation refused to squander, in a community strengthened by quiet philanthropy never linked to a public name. The wealthy who endure know that true power is not measured by what they display, but by what they plant. Consider Harold, who in the 1970s worked tirelessly to build a modest manufacturing business. He never flaunted his success, never appeared on magazine covers, never owned a yacht. Instead, he invested in education for his 3 children. He taught them to live beneath their means, to save before they spent, to think before they acted. Decades later, his children managed a business with discipline, expanded into new markets, and passed it on to their own children. Harold's legacy was not the money he left behind, but the mindset he instilled. The factory still stands today, half a century later, because he built not just profit, but permanence. Another hidden legacy comes through generosity disguised as normal life. In 2001, Margaret quietly created a trust to fund scholarships for students in her hometown. She never attached her name to it, never demanded recognition. Every year, 5 or 6 young people received help to attend college, none of them knowing who was behind the gift. By the time Margaret passed away, more than 100 students had graduated because of her. Only after her death did the town discover her role, and by then, the ripple of her generosity had already changed the course of countless families. That is the kind of legacy the rich never confess, one that whispers through lives, not through headlines. The wealthy also understand that legacy is not only about others. It is about discipline across generations. A fortune that is loud in one generation often disappears by the third, a pattern so common it has earned the phrase, shirt sleeves to shirt sleeves. The reason is simple. Wealth without wisdom erodes. The rich who endure counter this by embedding values into their heirs. They may insist their children work summer jobs, earn allowances, or study finance before inheriting a penny. Outsiders sometimes see this as harsh, but it is strategic. They know that money without preparation is poison. Distance from indulgence, even when abundance is available, ensures that the next generation carries the discipline to preserve what was built. Take the case of Elena and Victor, a wealthy couple in the early 2000s. Instead of leaving their children with unrestricted access to millions, they established a foundation that required them to serve as board members. The children had to evaluate causes, manage budgets, and make decisions together before accessing the family fortune. At first, the children resisted, longing for freedom. But over time, they learned the skills of stewardship. Today, 2 decades later, the foundation thrives, and the family wealth remains intact. Elena and Victor's true legacy was not the money itself, but the training they embedded in their heirs through structure and accountability. Legacy also manifests in communities. Wealthy individuals often support institutions, libraries, hospitals, local businesses that strengthen the places they call home. These contributions are often quiet, sometimes anonymous, yet they transform the fabric of society. A park maintained for decades, a scholarship program sustained across generations, a small business incubator that nurtures entrepreneurs. All of these become legacies greater than the names attached to them. The wealthy rarely confess how intentional these acts are because they prefer the myth that generosity happens spontaneously. In truth, it is often planned with the same care as an investment portfolio. The final, and perhaps deepest, legacy is cultural. Families who endure wealth do not just pass down assets. They pass down stories, traditions, and values. Around dinner tables, in family letters, in private conversations, they create a narrative of identity. They whisper to their children, "This is who we are. This is what we stand for. This is how we behave with money." That narrative becomes a compass, guiding decisions long after the original fortune builders are gone. Without it, wealth drifts aimlessly, consumed by the tides of desire. With it, wealth anchors itself across centuries. So when you think of the rich, do not be distracted by the masks of cars and houses. Ask instead what will remain after they are gone. For the wealthy who endure, the answer is never only possessions. It is lessons, opportunities, institutions, and habits. It is the whisper of discipline carried into future generations. It is a quiet gift that no one saw being planted, but that everyone benefits from decades later. That is legacy, the one they never announce, the one you can only recognize once time reveals it. Wealth, when stripped of its noise, becomes a question of endurance. What survives after the trophies lose their shine, after the headlines fade, after the individuals themselves are gone? The true answer is legacy. And legacy is almost always invisible while it is being built. The wealthy do not confess this truth, because legacy is not dramatic. It is not something you can post on a billboard or parade through a city. It is a slow layering of choices, each one whispering into the future long after the present has forgotten the voice that made them. The most enduring legacies are often disguised as ordinary life. Think of a woman named Clara, who ran a bakery in the 1980s. She lived modestly, serving bread and pastries to her small town for decades. Nobody thought of her as wealthy, because she never lived loudly. Yet each year she quietly set aside a portion of her earnings into municipal bonds, reinvesting the returns without fail. By the time she passed away, her estate revealed several $1,000,000. Her children, shocked, discovered that their college educations had already been secured, and her town discovered that she had left behind a fund to support local libraries. Clara's name was never famous, but her legacy outlived her in ways far greater than her daily routine ever suggested. The discipline of legacy lies in planting trees, under whose shade you may never sit. The wealthy understand this instinctively. They know that the fortune they guard is not simply theirs, but a resource that must be stewarded for those who will come after. This is why they often structure their estates not for immediate distribution, but for gradual, purposeful release. Trusts, foundations, and endowments are not just legal tools. They are vehicles of endurance. They ensure that the wealth remains productive instead of being consumed in a single generation. You can see the opposite when wealth is announced too loudly. Consider the story of Leonard, who struck it rich in the early 2000s through real estate. His sudden fortune was met with extravagance, luxury cars, sprawling mansions, and parties that became the talk of his city. His children grew up in indulgence, never learning discipline or respect for money. Within 20 years, the fortune had evaporated. Lawsuits, failed ventures, and reckless spending destroyed what Leonard had built. His loud legacy was not wealth, but ruin. Contrast that with the families who remain invisible, who keep their fortune disguised, who raise their children to treat money as a servant, not a master. Their legacies endure precisely because they were never announced. Legacy is also measured in opportunities multiplied. Think of Robert, a teacher in the 1970s who invested carefully and lived below his means. He never told his students of his investments, never bragged about his portfolio. But when he retired, he established scholarships for children from low-income families, ensuring that dozens of them could attend university. Many of those students went on to become doctors, engineers, and business owners. Each of their successes became part of Robert's silent legacy. His wealth was not only measured in numbers, but in the expanded futures of those he helped. The wealthy also weave legacy through culture within their families. They create rituals that reinforce values. Annual family meetings to discuss finances, traditions of volunteering, expectations of work before inheritance. These practices may look ordinary, even tedious, but they anchor wealth in meaning. Without such anchors, money drifts and legacies collapse under the weight of indulgence. With them, money becomes not just a resource, but a teaching tool, one that shapes character across generations. There's an old proverb that says, "A society grows great when old men plant trees whose shade they know they shall never sit in." This is the spirit of unannounced legacy. The wealthy who endure do not need applause for their efforts. They are content to plant, to water, to nurture, knowing that the fruit will feed others long after their hands are gone. The announcement is unnecessary because the results will one day be undeniable. Another profound aspect of legacy is anonymity. Many fortunes sustain communities without ever being linked to a name. Anonymous donations keep hospitals open, shelters funded, and research progressing. The donors do not confess their role, because the legacy was never meant to elevate their image. It was meant to elevate others. And in this anonymity, the legacy often becomes even stronger because it cannot be tarnished by the flaws of the individual. Perhaps the most striking truth is that legacy is not about what you leave behind, but about who you shape while you are alive. The wealthy know that if they raise children who are wise, disciplined, and compassionate, the fortune will sustain itself. If they fail in this, no amount of money will prevent collapse. This is why many of them prioritize education, mentorship, and discipline above indulgence. They see legacy not as a bank account, but as a character account, one that must be filled steadily until it's strong enough to guide the future. So when the world looks at wealth and measures it by the loud symbols, the houses, the yachts, the jewels, it misses the truth. The real measure is the whisper of legacy, carried quietly into future, invisible until time reveals it. The rich never confess this because the power of legacy lies in its silence. It does not need to be shouted. It does not need to be proven. It only needs to be lived. And when it is, it becomes the only kind of wealth that truly outlasts everything else.